Good afternoon, everybody. This is Dennis Wilbur with the Active Trend Trader for the weekly webinar that we do, Making Money Trading Stocks and ETFs. I want to welcome Michael Bishop, who's joined us today. Michael, welcome, my friend.
Well, thanks for having me. I'm looking forward.
Okay. As you can probably tell by my voice, I am not at 100%. I've got a pretty significant, hopefully it's just a cold. Hopefully it's not the flu, but I'm a little bit cranky and I'm a little bit congested. And so we'll proceed from here. I want to remind everybody that all the materials we do present are for training purposes only. Traders should always pay per trade any new method prior to the risk of their own personal capital. Past performance, of course, is no indication or promise of future performance. And I want to remind you, I will be taking questions. So, if you have any questions along the way, please go ahead and type them in. And then I'll come back to those just before we close. If you have a stock you want us to review or anything like that, please go ahead and get that in there also. Here's a little bit about who I am, what I've been doing. It's kind of fun. I was sharing with Michael. I just got back from Boise, Idaho, after visiting the grandchildren. And so along with little kid germs, I basically spent about 15 hours in an airplane, which is a giant petri dish for picking up nasty germs and all that kind of stuff. Hey, remember, the best trade of the year comes around about every 2 to 3 weeks. And I mean this sincerely. My old mentor basically drilled this into me. And sometimes, we're going to miss a trade. That's life of trading. But be patient. There's more than enough trades during the year that will help, if you take the trades appropriately, will basically allow you to make a good living trading stocks and ETFs. And if you throw in options, that kind of stuff, there's even more upside potential. I want to remind everybody the 5 pillars of active trend trading consist of: 1, what to trade. We focus on strong growth stocks and ETFs. Well, this is in BABA. Back when BABA was about 190, we focus and identify, based on the system, where to enter, which is pillar number 2, based on back-tested proprietary and front-tested proprietary signals. In this case, we entered a trade here on 123 for an earnings run, about 184.65. When to exit based on classical technical analysis. We had 2 exits on this particular trade. We got in at 184.65. We took a partial position off at 190 and the next position off when it hit up here at 199. Did it continue to move higher? Yes, it did. Am I upset because I didn't get the additional move? No, I'm not, because basically I executed this trade more or less to perfection based on the system. So we also identify what strategy to use. In this case, we were buying the stock. And then pillar number 5, which is what to expect. Active trend trading has had a success win-loss ratio of about 65% through the years, and so we can anticipate that that's what we should be getting on a regular basis. That's across many trades. And so will there be times when we get multiple trades in a row where there's losses? Yeah, that's, again, part of trading. Michael, have you ever had some trades where if you how many losses in a row does it take you before you kind of start questioning, okay, is it the system or is it me?
Well, actually, so far it kind of, at the end, the maths worked out. So I do a lot of little trades.
Yeah.
And so I hardly have a really bad series, which not necessarily means that I don't lose money, but it's not that trade after trade after trade just goes wrong.
Okay, excellent. So you basically, when you place your trade, I know we were talking about, you trade options, you trade futures, you trade, individual stocks and ETFs also. But when you get going right at the very beginning of your trade, you have already identified your stop loss. Yes?
Um, Vague. I have very clear profit targets, but with my stop losses, I am more flexible.
Okay. Now, when you say more flexible, what does that mean?
Well, also in an extreme situation, it may mean that I am willed to lose whatever it takes.
Okay. Now, that's primarily in your
Because
options.
I always have many positions, and if it just fits to my overall concept, I am not. I am not that aggressive on stopping the losers.
Okay. Is that primarily when you're trading options, if that's the case?
Yeah.
Okay.
No,
Yeah.
you're right, because the majority I trade options, and there, I mean, worst case, you have the expiry date, and then anyway you have to take a decision.
Sure.
And as options move or can move quite fast, I think that's kind of the the newer best practice, that you really focus on to take the winners off the table rapidly, and not block too much capital.
Right.
But no, I think I let the losers run, but I manage them.
Okay.
By kind of adding a put option to the call option or whatever,
Okay.
or the underlying or whatever. Yeah.
Okay. So you mitigate your.
So I have a very clear plan, but it's not necessarily a stop loss.
Okay.
That's the answer.
Good. And so clearly, guys, I just want to get that out there, is that Michael's trading options, and some option traders do in fact have a plan where they will let a option expire worthless. But again, on top of that, they will be trading a another mechanism within that option to be able to make sure he is generating and mitigating the losses. The objective of today's session is to timely actionable intel review at the end of the week. We'll do a real quick market review. And I'm defining this week's market as kind of like a market that's somewhat mixed. We've got or at least we had the NASDAQ was down, the S&P, the Russell, and the Dow was up, and so it's a little bit mixed. The Nasdaq has been the index that has been running hard, real strong up. So looking at some stocks and ETF for performance, any bonus trades that we may have, I'll be addressing also. So here's where we sit as of today. Again, it's so funny. When I go somewhere, it's like the Murphy's Law hits me with regarding trading. And normally sometimes in that time that I'm away or flying, the markets will swing either really huge one way or the other. That was the way it was when we left on Friday the 1st. I think it was Friday was the 1st of 1st of March was a Thursday. And then when we were coming back this past week on the 12th and the 13th, flying back from Boise, same type of thing. So let's take a real quick look at the markets and just see if we have some ideas here that we can. Okay, there we go. There's a one-day chart of the S&P. I want to show you a little bit of what I'm looking at. One, of course, is we had some resistance and or overhead supply right up here, which corresponded to this big red candle. and which was a, basically a selling signal. Selling signal to push it down, and sure enough, it gets back up into that area, sells off. We are holding above the 820 combo and the 50, so we do have a breakout. And is it going to reverse and move higher off of here? It's one of those where we'll see. It could also just say, you know what, I've had enough of this. I'm going to run down to this side. The essence of what I want you to take a look at, if you utilize this true strength index, just be aware, oftentimes when the market goes into an indecisive time period, you'll get, and there is not very much momentum, either one way or the other, is you'll get the TSI kind of just following very closely this zero line, which means that there's basically an equilibrium of momentum to the upside and an equilibrium of momentum to the downside. I've identified on this chart a area of strong overhead supply, which is this block here, and that goes from about 2817 up to 2842, and then you can go on up above that where your ultimate past high 2874 down to a range of about 2846 is another area of strong resistance that could basically reverse this reverse any type of movement to the upside. As you can see, right now, daily chart, 1, 2, 3, 4, 5 days where we're just kind of meandering. On the weekly chart, not quite this really isn't an uptrend to reverse because of the huge swings and all that kind of stuff, but it's moving back down towards the middle section of this big green buy candle or demand candle. And so about 2730, that may be where it throws out its anchor and says, okay, I've gone down far enough. Highlight, if you will, what's going on here. TSI is trying on a weekly chart to get a bounce off the zero line, which is usually a strong level of support. On a daily chart, what's it doing? It looks like it's trying to get another bounce up, but as you can see, just kind of like meandering. Here's a good positive. You get the two-line on the market forecast, two-line cluster in the lower bullish zone below 20. You could anticipate a move up on that. However, the thing about it is we have not seen the trigger to say, okay, I'm moving up yet. So, Michael, you got anything on the S&P before I move on?
Not really. No, that's fine.
Okay. NDX has been the strongest of these. It got a breakout about the 723 level. It is holding that breakout so far. Again, it's not giving us a real clear, hey, let's, buy. We haven't got another buy signal here yet. So what you may want to do is just switch over to the intraday charts, if you will, and trade this off the intraday charts because we're getting a little bit of cross signals. We do have some negative divergence that's going on here, which is basically this high is higher than this high, but the TSI was higher here on this high than this high. So therefore it's negative. It's considered negative divergence. That can oftentimes be a prerequisite, and also we need to pay attention to it because it may be spilling, saying, hey, I am really, really, really ready to throw out the anchor and rest for a while. So that's what we've got going with that. And the Russell. I heard a very interesting presentation yesterday. Russell moved all the way back up into this zone here where this overhead supply is, and it did that on Tuesday. Sold back off, has dropped down to the 8-day moving average, and is getting a little bit of a bounce. Is it going to try lower? It's got some strong support or demand floor down here at about 1560-ish, where we'd anticipate, there's a zone here that we should get a bounce. It happens to just coincide with a 20-day moving average. And so just, for right now, we can Just draw a little line across here to give us an idea of where this may bounce. Let's roll over this real quick over to the to an intraday chart. There we go. Since Russell has been in an uptrend, we have time to wait. As you can see, it's pushed up here. TSI got up to the 0 line after pulling all the way back down to the 50 level. So as we said, this level down here, about the 1580 down to, let's say 1575, that would be a good area for a potential bounce to move higher. If we basically proceed and roll over and continue to break down below the 8-week moving average or 8-day moving average here, that could line us up to go down to the next level of the 1560 level. So that's what I'm looking at. So I hope that when I'm identifying these areas and these levels, guys, that you're making notes of that so you can help plan your own trade. And so Eric says that he gets hit with Murphy's Law of trading when he's traveling also. Yeah, I know it's a pain in the butt. It really is. So, okay, Michael, you got anything on the Russell or the other?
What I hear more and more is that the Nasdaq is only driven by so few stocks.
Right.
What do you think of it?
Well, let's take one of the indicators that we do, in fact.
Or in other words, I mean, what we see now is a discrepancy between, I mean, Boeing, Caterpillar, and these shuffle stocks.
Right.
They corrected quite significantly, and the others are still in a clear uptrend.
Yeah, one of the things I'll share, and we haven't gone over this chart in quite some while, but it's a percentage of stocks on the NYSE that are above their 20-day moving average, and typically they consider it bullish if it pushes up here where it's above 60 and pushes on up to the 60, 80, up there to the 80 level, which is where it tends to turn over. So for right now, it's showing that, hey, we still have some power up to the upside. And it's telling us that, 60, what's the number for today? About 65% of the stocks on the NYSE are, in fact, above their 20-day moving average. And so that, to me, tells me that, okay, there are several stocks that are, it's more than just the FANG stocks that are participating in this current uptrend. And so I know a couple of years ago where we were really, you'd see the FANG stocks on the NASDAQ and the S&P, that few number of stocks, because those are a weighted average, they would have a big influence on the other on where the index was going to go. I'm not saying that it's less now, because I think it's still an important aspect. However, it appears as if there are other stocks that are in fact going along with the trade as we currently look at it. But it's worth keeping an eye on, because if the market starts to falter, we can look for are the other stocks on the S&P and NASDAQ, which are not the Facebook, the Netflix, the Amazon, the Apple, the Google, if those start falling apart, or if everything below those start to fall apart, those entities can hold up the S&P, for a long time. And that's one of the reasons why we look at that, percentage of stocks above the 20-day moving average on a non-weighted index, such as the Russell and or the NYSE. So I don't know if I answered your question or not, but.
Oh yeah, definitely.
Okay. So hey, let's take a real quick look at gold. And I want to draw everybody's attention to, come back here, I want to draw everybody's attention to what tends to happen in gold here in the late June, July time frame, and then what proceeds and what takes place after this is normally you get a really nice move, a bid up on gold that just goes nuts. This is the seasonality of gold. This is the black line is the 40-year pattern. The red dash line is the 15-year pattern. But you can see on both the 40 and the 15-year pattern, you both get this big move up. So we want to be positioning ourselves and being patient in there. Now, what about in between? Here, where are we on this chart? Well, we're kind of like here in the middle of March. And so if we get, what's happening is basically during this period of time, you get these little zigzags that are basically giving giving gold no real way to go. Now, the question you're going to have to ask yourself is, do I want to trade these moves? Because these moves could be, 10, 15% on a leveraged ETF for gold, like the gold miners that we trade. So we'll take a look at that real quick, and then here's where we are on the NASDAQ. NASDAQ tends to catch a bid going into the end of March, into April, and then tends to run the rest of the year. Will this happen this year? I don't know, but this is covering 20 years worth, going through the same thing here. We've expanded this. Here's where we're at. Russell tends to, we're moving into one of the bullish tendency time frames for Russell, middle of March through about middle of July. And so if we know that this is a bias, we can plan trades around that, or at least favor one way or the other. Here's where we're sitting with the active trend trading system through mid-March. And then here's what we focus on primarily at active trend trading is we limit the number of stocks that we cover in ETFs. We basically have about 11. That's all we need to look at. We have 3 strategies we use, and we're waiting for a setups on strategy 2. And then strategy 3 is basically we sell premium and let the entities run on that strategy. We've been doing some refinement. Currently, we sold the 320 put. It expires next Friday for Tesla. Sold it for $625. It is currently, it's showing a positive amount. In spiders, we sold 2 of the 23 March 274 at $1.96. As long as spiders are flirting with 274, so we're going to keep an eye on that one really closely. And so that's where we are at with that. And I'll come back because I want to cover a couple of items for potential moves. So I want to cover LABU. And let's see what's going on with LABU. LABU is a 3-time leveraged ETF for the biotechs. It got up and hit, past overhead supply at the 110 level and is now selling off. I would move this to if you're following something and you like the way this one moves because it's got great patterns on it. It also has very nice, it moved like this move here when it went up last time. 35% move here. 46%. So this is a daily chart. So it moves a lot. My suggestion is try to pick it up against the outer limits of the Keltner and or moving average envelope, which is the darker color one here. And so right now we're pulling back. it may settle out somewhere between 92.63, but we can also look for it. Hey, if it gets back down to $89, that may be a significant buy for us. So keep that in mind. If you have the patience to wait, again, I won't send this out as a bonus trade, but I'm just showing you guys where to find this. The other one is UCO, oil. Okay, oil's in the process of, it's in a big triangle. Okay, if it breaks out of this triangle and proceeds to move harder, and UCO is the leverage ETF of oil, excuse me, yep. And if it moves up above this, it's likely to go back up to the $28 level or more. From what I'm hearing from the economy, as the economy gets more robust and continues to accelerate in demand, that oil has the opportunity to move up considerably also. In Europe, Michael, are people starting to pay some attention to the potential move up of oil?
No.
Okay.
No.
Okay.
I think no, around oil it's pretty calm. I have not. It's just interesting that you showed this slide. Yeah.
Oh, okay.
Maybe.
Is that a good thing?
A breakout.
Yeah. I mean, it's right up against it. I mean, if it breaks out, that could, and then the breakout from there up to its past highs would be about 12%. But oftentimes, what happens if you break out here, you just go and take your line across here, activate. Something like Power Warriors or something. Go over here. Let's say this is the breakout, even though it hasn't totally broken out yet. But we can call that back down, and as you see, if that in fact is the breakout, then it's going to, this total run is about 20%. So for a, not a real volatile issue, that's something to keep in mind. Oh, come on. There we go. And the last but not least, we're looking at following either. Now on these, I will send out alerts on JNUG and JDust as bonus trades if you are a member of Active Trend Trading. In other words, either of course the premium members, you're going to always get it, but if you're a person who subscribes just to the newsletter, that's fine. You'll get a hard copy email alert when we get a trigger on either JNUG or JDust. I want to show everybody what I'm looking at with JNUG, and here's what I'm looking at. Is basically I identify this level of supply, this floor of supply of demand, right here. It came right down to it and stopped dead in the water this morning at 1260. Okay, we get the market forecast starting to move up. The only thing that concerns me right now, and the only reason why I don't call this as a potential trade to the upside right here, is that this is a move up. TSI is not moving up whatsoever. It's kind of just driving sideways, and it's been driving sideways since about the 15th of February, for a month. There has been zero zip type of momentum behind the gold, and it's even worse on the inverse ETF. It is just hanging right there, bouncing around the 820 50-day moving average combo. TSI sideways, hard sideways, and so what can we say? What can we basically draw from this particular chart? Is, well, one, we can draw that we do have support right where it's bouncing right now, or resistance right where it's bouncing right now. We have some support down here at, we have multiple levels of demand support. Well, let's say it's right there. And so if we will be patient and just wait, because we're getting a shooting star type formation today on the daily, so it could drop all the way down right here on JDust. I can trigger a trade. I could actually put the trade in now to say if prices get back down to let's say $52.98, go ahead and buy me some. And then expect to move back up to that area right there, which is about a 14 or 15% move. And that'd be $7.87. Something you might be interested in. Again, you can highlight it. You see where, because we had demand come in right there. So we're right in the middle of a demand corridor or zone right down here at the 52.98 level. Is it going to get back down there? Who knows? But that's where the safest place to buy this would be. And we can look at, and we'll be closer to the stop out. So I just wanted to share that with you. As of right now, like I said, I almost like JNUG better than JDust, but both of them are kind of they could kind of go either way. So, okay, my friends, I am, as you can tell, my voice is just about there. Michael, I want to thank you for joining today.
Well, it's a pleasure to be here.
Yeah.
And take care, yeah?
Yeah.
Really
and so what did you think about the potential of a potential gold trade? That yes, there is one setting up, but we kind of don't know if it'll be the inverse leveraged ETF or the directional ETF. I don't know.
Well, as said before we started, I have not followed gold in particular.
Okay.
And I don't know. Yeah.
And so.
And I mean, what's really pretty clear that the long downtrend of gold has been stopped around, I think, last year or even 2 years ago. So
that is
it's
correct.
now a sidewards market.
That is correct.
In an upwards market again, but I think that the big up move will come if stocks get weaker.
Okay.
Otherwise, it will be difficult.
Yeah, you can kind of see what you're talking about here on JDX, which is the gold miners, but it's it's not the leverage type. As you can see, it's really, really close to where it has bounced in the past, and so that in itself also, if you want to be in a learning mode, you could also always trade this. If it gets down to 14, buy it. If it drops 20.80, you sell it, you get rid of it, because the move here back up to just these past highs would give you, even this is non-leveraged, about 17%. That's not too bad. So, okay, Michael, I will call it a day. I'm going to go and basically put something on my voice so I can get ready for the next webinar. I want to remind everybody, 2018 is turning out to be a wonderful year of breakthrough and restoration. Continue to believe that. We're getting ready to go into premium members next final hour. And so from my backyard to you guys, have a great weekend. And until Monday, we will get going again on Monday with the Aftermarket Mondays. Aloha, trade well, and prosper. God bless everybody. Thank you, Michael.
Okay, welcome. Bye.